Is Coinbase a buy at $200 per share? And if you want to build indestructible generational wealth, is Coinbase a good choice as a long-term investment? The only way to know is via fundamental analysis to find the intrinsic value. I spent the last week putting together a full fundamental analysis of Coinbase based on their recently reported 2024 results. Coinbase is a potential tactical investment, and at $204 per share, I have a sell rating on the stock. In my research, I discovered 5 things that got me very excited and 4 red flags to watch out for. So what did I discover? What is my value for Coinbase stock? And what is an ideal entry point should you decide to become a Coinbase shareholder? Let's dive in, find out. In this video, I will cover Coinbase's recent results and what everyone is missing, what I think about Coinbase stock and what my analysis uncovered, what Wall Street's smart money says and how it can impact your portfolio, and how you can use this information to build wealth and what you must do if you decide to buy. Are you an investor in Coinbase stock? Why or why not? Let me know in the comments below. Coinbase recently released 2024 results and it was a banger. If you're enjoying this, please smash that like button. Let's cover the red flags first. 61% of its revenues still come from trading fees, making it vulnerable to crypto market downturns. The good news is that is down from 87% of total revenues only 4 years ago. The company's performance is highly sensitive to the unpredictable swings in crypto asset prices, which could trigger short-term losses. A quick look at the revenue over the last 5 years looks like a heart monitor signaling the volatility of crypto. A heavy reliance on major cryptocurrencies like Bitcoin and Ethereum means any significant downturn in these markets may adversely impact revenues. The good news is that this has been decreasing over time to from over 70% in 2019 down to 44% in 2024. The emergence of decentralized and non-custodial platforms poses an ongoing threat to Coinbase's market share. Here's what got me really excited. As one of the most trusted names in crypto, Coinbase benefits from strong brand recognition and a loyal customer base. Significant investments in cybersecurity and regulatory compliance provide a competitive edge in an increasingly scrutinized market. Coinbase is no longer just a crypto exchange. It's evolving into a full-stack financial infrastructure provider with products across custody, staking, derivatives, prime financing, and Base, its L2 platform. 75% of global crypto volume is derivatives, but less than 5% of that happens in the US. Coinbase is working to change that. CFO Alessia Haas calls this a game changer for both US retail and institutional clients. Coinbase's total legal victory against the SEC, no fines, no business changes, dismissed with prejudice, is now a major credibility and branding asset. Coinbase was part of the first ever White House Crypto Summit attended by the president and senior cabinet officials. And the US is creating a strategic Bitcoin reserve sourced from confiscated Bitcoin. CDP, or the Coinbase Developer Platform, is letting third-party companies integrate crypto custody, payments, staking, and trading via APIs. This is what everyone is missing. While less than 10% of revenues only a few years ago, international markets now represent 19% of total revenue, up 16% year over year. Coinbase is now the #1 crypto app in Brazil. Markets like Singapore, Australia, and Canada are already paying for themselves within 2 years of launch. This has given Coinbase confidence to expand into new high-growth markets in 2025.
Hubba, 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 money, 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 who do you trust?
When it comes to any stock, I let the numbers tell the story, and that involves looking at the company's financial statements. Would you buy a house without knowing the size, location, dimensions, or condition? No. That is what you are doing when you buy a stock without understanding the 3 financial statements. If you want to value companies like the world's top financial analysts on Wall Street, check out my school community Win Like Wall Street. Just scan the QR code on the screen. The balance sheet shows us how the business is funded. If assets grow faster than liabilities, equity increases, and we win. Coinbase has some very unique debt features, and I can't wait to show you. Coinbase has $8.6 billion of cash and cash equivalents, and with this cash, they are actively scaling prime financing, institutional lending, considering opportunistic equity repurchases under their $1 billion share repurchase authorization approved in October 2024, and deploying capital to international expansion and acquisitions. Retained earnings is positive, which is a pleasant surprise for an early-stage growth company. First, the company pays no dividend. Second, net income has been positive 4 out of the last 6 years. We will see this next in the income statement. While the company has $4.2 billion of debt, it is a very unique structure. $2.5 billion or 60% of the debt consists of convertible notes, and these notes have PIK or paid in kind, not cash interest. This interest adds to the balance, but is not a cash outflow, which gives the company more financial flexibility. So what's the takeaway? Coinbase is an early stage growth business with a conservative balance sheet, a stockpile of cash, manageable debt, and a promising future. The income statement shows us if the company is generating profits. We want to see revenues grow faster than expenses, which will grow profits. The way we determine how effective a company is at generating profit is via margin. Revenues minus expenses equals income. Income over revenues equals margin. If a company has higher revenues and lower expenses, it will have higher margins. If revenues grow faster than expenses, margins will get bigger or expand, which is what we want to see. Revenue is very choppy, which leads to volatility. After a 500% increase during the COVID boom, the next 2 years of crypto winter resulted in a 60% decline, only to be followed by revenue more than doubling in 2024. Gross profit is positive and growing. Despite the volatility in revenue, gross margin has remained above 80%, with a 5-year average over 85%, and this shows they are managing transaction expenses efficiently. Whenever we see a big number that's out of the ordinary, like here, we need to dig into the financials. As we can see here, they gained over $687 million from crypto investments in 2024. While Coinbase is a brokerage and they make money when we buy and sell crypto, they benefited significantly from holding crypto in 2024. Be careful, because this is a double-edged sword that cuts both ways. So what's the takeaway? We see positive EBITDA and net income, which is very promising, but we do see a lot of volatility, and we need to keep an eye on that moving forward. The cash flow statement tells us where the cash is generated by the company, and there are 3 buckets. Operating, which is the cash the company generates internally. Investing, which is the cash demanded for long-term growth. Financing, which is the cash the company generates externally. When we add these together, we get the net change in cash. We want to see companies generating cash, making this positive, not losing cash, which would make this negative. While free cash flow is nearly tripled from 2023 to 2024, we see the volatility over time. This gives us less certainty when we project our cash flows. CapEx is very reasonable and steady, which makes sense for a service business. CapEx does not vary based on the volatility of the cash flows and is the main reason that there isn't more volatility in free cash flow. The company has consistently issued equity through its existence. While the biggest spike was in 2021 as a result of the IPO, investors need to keep an eye on this because as equity gets issued, their ownership is being watered down and reduced without many realizing it. So what's the takeaway? While operating and free cash flow are generally positive, we need to be mindful of the volatility, and we want to see the company eventually self-funding without the need for new debt or equity. So what does this all mean for the valuation of Coinbase stock? Let's cover that next.
The wait is over.
On Wall Street, we build a discounted cash flow or DCF model to measure the intrinsic value of companies. Because companies generate cash flows and we projected the 3 financial statements, we could take those future cash flows, discount them back to today to get a current intrinsic value of the company. We cannot do this type of valuation with crypto, baseball cards, or art because they have no cash flows. If you want to learn how to value companies like we do on Wall Street so that you could build generational wealth, scan the QR code on the screen to join my school community, Win Like Wall Street. Also, you can check out the step-by-step video I did on building a DCF model, which includes an Excel file. The link to that video appears above and is in the description. As you can see on the left, we take specific line items we projected from the 3 financial statements. We use these line items to calculate free cash flow to the firm, or FCFF. To this, we add a terminal value, which is the value from the end of the model out to infinity, because the company does not stop operating when our model ends in 5 years. We discount these cash flows back to today to get the total enterprise value. We strip out the debt, we add the cash, we strip out non-controlling interest, we add associate investments, we get an intrinsic equity value of $51.1 billion. We divide by the current shares outstanding, we get an implied share price of about $201 compared to the current close of $204. It is a 1.4% premium, which is a sell rating. On Wall Street, if a stock is trading for more than its intrinsic value, it's a sell because we don't want to pay more than it's worth. So what does Wall Street have to say about Coinbase stock, and how can that impact your portfolio? Let's cover that next. While some analysts express optimism about Coinbase's growth potential, others highlight concerns about valuation and competitive pressures. Mizuho has a neutral rating on the stock. They reduced their target from 280 to 217. While acknowledging strong trading volumes, Mizuho remains cautious due to potential pricing pressures from increased competition in the crypto trading space. Rosenblatt Securities has a buy rating on the stock with a target of 305. They maintained a buy rating reflecting a positive outlook on Coinbase's performance. Bernstein has a buy rating on the stock with a target of 310. They initiated coverage with an outperform rating, indicating confidence in Coinbase's growth prospects. This is a screenshot of Cap IQ. I use it all the time for my analyses. 25 analysts cover Coinbase on Wall Street. The target price range is from a low of 170, which is a 17% decrease, to a high of 475, which is a 133% increase. Upside outweighs downside by almost 7.8x, 133 to 17. Hedge funds typically look for 2 times or greater. The median is 328, which is a 61% increase. The overall rating on a scale of 1 to 5 is 2.22, which is an outperform rating.
You should seek the advice of an investment professional always. I do not know your individual financial situation. This content is meant to educate and is not investment advice.
That being said, I do not own a position in Coinbase, though I do believe it could have a place in my portfolio at the right price. If you decide to buy Coinbase, you need the right entry point, which I'll reveal shortly. Warren Buffett often talks about a moat when referring to a competitive advantage that a company has. It refers to medieval times when a wider moat around a castle meant greater protection. In the case of Coinbase, there is little to no competitive advantage. To give you some perspective, right now there are around 20 or so online stock brokerages available. Crypto exchanges like Coinbase, there are over 500 to choose from. That's 25x more. Beta is a measure of volatility by comparing how much a stock moves relative to the market. If a stock moves in lockstep with the market, it has a beta of 1. Higher beta means more volatility, and for this greater volatility, we should be compensated with higher returns. Remember, when the market goes down, higher beta means the stock goes down more. Coinbase has the highest beta of any stock that we've ever analyzed on this channel, but we have not been compensated for the higher risk. If we look at a few examples, Nvidia has a beta of 1.8 and a 1-year return of 30.4%. Tesla has a beta of 2.5 and a 1-year return of 62.2%. Palantir has a beta of 2.8 and a 1-year return of 287.7%. And Coinbase has a beta of 3.5 and a 1-year loss of 23.5%. Many people buy Coinbase thinking it's a safer way to gain exposure to Bitcoin, but the data does not reflect that at all. In fact, Bitcoin has a higher correlation with the S&P 500 than with Coinbase, 0.92 versus 0.81. If you want exposure to crypto and you think Coinbase is the answer, it is not.
That's not good.
Since the IPO, Bitcoin is up 38% and Coinbase is down 38%. And Coinbase has a higher standard deviation than Bitcoin, so you are not getting compensated for the higher risk with a higher return, but instead with a big loss.
That's no bueno.
Coinbase hit a 52-week high of 349.75 in early December 2024 after the post-election surge, and it's down almost 42% since then. In the last year, Coinbase is down over 23%. My model shows a value of 201, which is a 1.4% premium at current levels. On Wall Street, we buy with a margin of safety of at least 20%. So Coinbase is a sell at current levels. But if you're interested in buying Coinbase, I'd be looking to buy below 170 in the 165 to 170 range. Coinbase should be a satellite or tactical position in a portfolio, and due to the volatility, it's extremely important to buy at a discount to provide protection and a margin of safety. Frankly, if Coinbase interests you for the crypto exposure, you're better off buying Bitcoin directly or get your exposure to Bitcoin via the Grayscale Bitcoin Mini Trust ETF under the ticker BTC. BTC gives you the return and exposure of Bitcoin without needing a crypto wallet or crypto exchange, and it is accessible via any standard online stock brokerage account. If you like this and want to see another in-depth stock valuation, check out my Rivian video here or my Celsius video here. And if you found this valuable, please share this with someone who you think would enjoy this. As always, be relentless.